Right now, somewhere in Australia, a retiree is standing at a bank counter asking to take out some of their own money in cash. And they're being asked why. What's it for? And in their chest, there's a small, cold worry that they've done something wrong. That somewhere there's a rule, a $10,000 rule, and that they might be about to break it just by touching their own savings. I want to take that worry off you today, because most of what you've heard about the so-called $10,000 cash rule is wrong. Not slightly wrong, wrong at the center. And the version that's true is far less frightening than the version that's been whispered around morning teas and shared in forwarded emails for years. Here's the thing nobody sits you down to explain. Your bank won't ring you to clear this up. The fellow at the counter is reading from a script, and half the time he's as unsure as you are. The rule that does exist gets muddled with a rule that almost existed and a rule that never existed at all, and you're just expected to know the difference. So today, you and I are going to separate the three. By the end of this, you'll know exactly what the $10,000 figure actually means, who it actually applies to, and whether it touches you at all. In plain English, with the source you can check yourself tonight. Now, before we go a step further, a quick note, and I say this on every video because it matters. This is general, factual information, not financial product advice, not personal financial advice, not tax advice. It doesn't take your own situation into account. Before you act on anything, speak with a licensed financial advisor, a registered tax agent, or your bank about your own circumstances. The rules and the numbers can change, so verify the current ones at austrac.gov.au or moneysmart.gov.au. After 30 years inside the Australian financial industry, watching how these rules actually land on ordinary people's accounts, I can tell you this one causes more needless fear than almost anything else I deal with. So let me say it plainly, and then I'll spend the rest of our time proving it to you. There is no law in Australia that bans you, as an ordinary person, from holding, withdrawing, depositing, or spending more than $10,000 of your own money in cash. There isn't. And stay with me right to the end, because the last part of this is the one almost nobody knows, and it's the one that could actually get a careful, well-meaning retiree into genuine trouble. By accident. It's not the thing you're afraid of, it's the thing nobody warns you about. I'm not your financial advisor. I'm the person who reads the rulebook out loud in plain English so you know what to bring to your own conversation. Let's get into it. Let's start with the question that's actually behind all of this. Is the $10,000 cash rule real, and does it apply to you? Because the honest answer is in two parts, and the two parts feel completely different. Part 1. Yes, there is a real $10,000 figure in Australian law involving cash. That part is true. There is a body called AUSTRAC, the Australian Transaction Reports and Analysis Centre. They're the agency that watches the financial system for money laundering and the financing of serious crime. And under the rules they administer, there's something called a threshold transaction report. You'll hear it shortened to a TTR. So far, this sounds exactly like the scary story, doesn't it? Hold on, because here comes the part that changes everything. Part 2. That $10,000 reporting obligation is not on you, it's on the business. Let me say that again slowly, because this is the whole video in one sentence. The threshold transaction report is a duty placed on the bank, the casino, the bullion dealer, the businesses that AUSTRAC calls reporting entities. When one of those businesses is involved in a cash transaction of 10,000 Australian dollars or more in physical currency, the business has to lodge a report with AUSTRAC, generally within 10 business days. That's it. That is the rule. It is paperwork the business files. It is not a limit on what you're allowed to do. It is not a tax. It is not a fine. It is not a ban. Here's what that actually means for you. If you walk into your bank and withdraw $12,000 in cash because you're buying a second-hand caravan, the bank may file a report with AUSTRAC about that transaction. You have done nothing wrong. You will not be fined. You're not on a list of suspects. The report is simply the bank doing its own legally required housekeeping. The money is yours, the transaction is legal, and a record of it exists. That's the whole story of Part 1 and Part 2. And don't take my word for it. The rule is set out on austrac.gov.au under Threshold Transaction Reports. You can read it tonight in your dressing gown with a cup of tea. I'll tell you exactly what to search for so you can see it with your own eyes. Type in AUSTRAC Threshold Transaction Report. It's right there. I'd rather you check it than trust a stranger on the internet, even a well-meaning one. Now let me put this in plain English, because the words money laundering make it all sound like something out of the films. And I think that's part of why it frightens decent people. Austrac exists to make it harder for serious criminals to move dirty money through the financial system without anyone noticing. Drug money, organised crime, the financing of terrible things. The way you catch that isn't by stopping ordinary people from using their own cash. It's by asking the businesses that handle cash, the banks, the casinos, the precious metal dealers, to keep a record when large amounts move, so that if investigators ever need to follow a trail, the trail exists. That's all the report is. It's a breadcrumb in a system, dropped by the business, so that the rare criminal can be traced. You, withdrawing your own honest money to fix your roof, are not the target. You're just walking past the breadcrumb machine. It does its little click, and you carry on with your life, none the worse for it. And here's a small thing worth knowing, because it puts the size of it in perspective. These reports happen constantly, every single business day, in their thousands. Your one transaction isn't some red flag waved in a quiet room. It's one drop in an ocean of routine paperwork that the system is built to handle. So if part of your worry was that filing a report somehow makes you stand out, makes you a person of interest, let that go. The opposite is true. It's the most ordinary thing in the world. Now, you'll be thinking, but Oliver, if there's nothing wrong with it, why does the bank ask me what it's for? Why do I feel like a criminal? That's a fair question, and it deserves an honest answer. So hold that thought because it's coming, and it's one of the most useful parts of today. But first, here's where the real confusion lives, because there's a second rule, a far scarier rule, and this one almost happened. And the fact that it almost happened is exactly why so many Australians believe it did. Let me take you back to 2019. There was a piece of legislation introduced into the federal parliament called the Currency Restrictions on the Use of Cash Bill 2019. And this one was the real thing people fear. This bill proposed to make it a criminal offence for a person to make or accept a cash payment of $10,000 or more. A genuine ban. Not a report filed quietly by a bank, an actual offence, with proposed penalties that could include fines and up to 2 years imprisonment. If you'd heard a version of the cash rule that involved jail, that involved being a criminal for paying cash, this is where that came from. It wasn't invented out of thin air. It was a real bill, with real numbers, debated in our parliament. And here's the part that everybody forgets. That bill did not become law. Let me walk you through exactly what happened, because this is the heart of the whole misunderstanding. The bill passed the House of Representatives. That's the lower house, the Green Chamber, the one you see most on the news. So at one point it was genuinely on its way. That's the kernel of truth that keeps the fear alive. But a bill doesn't become law just by passing one house. It has to pass the Senate too, the upper house, the House of Review. And in the Senate, the bill stalled, it was sent off to a committee, and ultimately, it was rejected. It was discharged. It never passed the Senate, and it never received royal assent, which means it never became law. So I want you to hear this clearly, because it's the single most important fact today. The cash ban that frightens so many people, the criminal offence for paying cash over $10,000, did not happen. It was proposed, it was fought over, and it was stopped. As things stand, there is no general law in Australia making it a crime for an ordinary person to pay in cash over any amount. And again, please don't take my word for it. The progress of that 2019 bill, every reading, every vote, every committee is on the public record at aph.gov.au, the Australian Parliament's own website. Search for Currency Restrictions on the Use of Cash Bill 2019, and you'll see its journey end without ever becoming law. I'm not asking you to believe me. I'm asking you to check the people who actually keep the record. Now, do you see what's happened here? Do you see why this is so confusing? There are two different things, and they've been welded into one monster in people's minds. There's a rule that exists, the Austrac report, which is harmless to you and just paperwork for the bank. And there's a ban that doesn't exist, the 2019 bill, which was scary, but which was stopped at the door. People take the fear of the one that failed and they staple it onto the one that's real. And the result is a retiree at a bank counter, frightened of their own money, for no good reason at all. But here's the part most people miss, and it's where I have to be completely straight with you, because I won't paint you a rosier picture than the truth. Just because there's no government ban doesn't mean nothing has changed at the bank. Stay with me, because this is the bit that explains that uneasy feeling at the counter. Over the last few years, a number of Australian banks have, on their own, tightened up how they handle large amounts of cash. Some have reduced the maximum cash you can withdraw in one go. Some have removed cash handling services from certain branches altogether. Some now ask you what a large withdrawal is for. And I understand exactly how that feels. It feels like a rule. It feels official. It feels like the government is watching your money. But here's the honest distinction, and it matters enormously. That is a commercial decision by a private business. It is not a government ban on cash. A bank choosing to limit cash at the counter or asking questions about a big withdrawal is the bank managing its own operations and meeting its own obligations. It is not the law telling you that you're not allowed to have your money. The difference between the law forbids this and my bank has changed how it does business is the difference between feeling like a suspect and feeling like a customer who needs to plan ahead. One of those is true, the other is a story. And here's the practical upshot of that distinction, the bit you can actually use. If your branch is tightened up, the answer isn't to feel wronged or to feel watched. The answer is simply to plan ahead. If you know you'll need a larger sum in cash, ring your branch a few days before and ask them to have it ready. Ask them what their own limits are at the counter, because they vary from bank to bank and even branch to branch. There's no shame in it, and there's no rule you're tiptoeing around. You're just doing what sensible people have always done with money, which is to make arrangements in good time rather than being caught short on the day. I've watched people work themselves into a state about this when a single phone call the week before would have settled the whole thing. Now you might be thinking, but Oliver, if cash is being made harder to get at, isn't that a kind of ban by the back door? I understand why it feels that way, I do. But I want you to hold the two ideas apart in your mind because they really are different. A right that the law still gives you, the right to use your own cash, is one thing. The convenience with which a particular private business chooses to offer it to you is another. Your cash is still legal tender. Your money is still yours. What's changed is the front desk, not the law of the land. And keeping those two straight is what stops a manageable inconvenience from feeling like a violation of your rights. So let me answer the question you've been holding since the start. Why does the teller ask what it's for? Part of it is those tightened bank policies I just mentioned, and part of it is genuinely about your protection. Banks are on the front line against scams that target older Australians. When someone your age asks for a large cash withdrawal, a good bank is trained to gently check that you haven't been talked into it by a scammer on the phone pretending to be from the tax office, or a romance you met online, or a fake investment with returns that sound too good to be true. I know it can feel intrusive, but case after case, that one awkward question at the counter has stopped a retiree from handing their life savings to a criminal. So the next time you're asked, you don't have to feel accused. You can answer plainly, I'm buying a car, or I'm doing some renovations, and that's the end of it. You've broken no rule. There's no rule to break. And let me sit with this one a moment longer, because it matters more than the rest of the video put together. The genuine danger to your money in retirement, the one that's real and growing, is not austrac, and it is not some cash ban. It's the scammer. It's the phone call that says you owe the tax office and you must pay today in cash or be arrested. It's the lovely sounding voice that spent weeks earning your trust online. It's the bank investigator who needs you to move your savings to a safe account. Those people want you to take your money out in cash, quietly, and tell no one. So here's the irony I want you to really feel. The very thing some people resent, the teller asking a question, the small friction, the moment of pause, is one of the last lines of defense between a lonely afternoon and a stolen retirement. A genuine organization will never, ever rush you, never threaten you, and never tell you to keep a withdrawal secret from the bank or your family. If anyone does, that's your signal to stop, hang up, walk away, and talk to someone you trust. So I'd turn the whole fear on its head for you. Don't be afraid of the rule that protects the system from criminals. Be alert to the criminal who's trying to use you. The first one is paperwork. The second one is the real threat. And moneysmart.gov.au, the government's own money guidance website, has plain, calm pages on exactly how these scams work and how to spot them. That's an evening better spent than worrying about a ban that never came. Now, I want to be fair about something, because the picture isn't all reassurance, and I'd be doing you a disservice if I left it there. There is a real way an ordinary, well-meaning person can get themselves into genuine trouble around this $10,000 figure. And it's almost the exact opposite of what you'd expect. It's not from withdrawing too much. It's from trying to be clever about the threshold. This is the last one, and it's the one almost nobody acts on properly because almost nobody knows it. It's called structuring. And here's what it means in plain English. Structuring is when a person deliberately breaks up their cash transactions into smaller amounts, on purpose, specifically to stay under that $10,000 reporting line and avoid a report being filed. So instead of one deposit of $12,000, they make a deposit of $9,000 on Monday and another of $3,000 on Thursday, thinking they've been smart, thinking they've kept under the radar. Here's the trap. That is an offence. Deliberately structuring your transactions to dodge the reporting requirement is against the law in its own right. So think about the cruel irony of it. The honest thing, depositing your full amount in one go and letting the bank file its harmless report, is completely legal and completely fine. And the thing the fear pushes people toward, splitting it up to avoid the paperwork, is the thing that's actually illegal. So I want to be as clear as I have ever been about anything on this channel. I am not telling you to split your deposits. I am telling you the precise opposite. Do not break up your cash to dodge the threshold. There is no need to, because the report harms you not at all. And trying to avoid it is the one move that turns a harmless transaction into a genuine legal problem. If you have $10,000 or $20,000 or $50,000 of your own legitimate money in cash, the safe, legal, sensible thing is to bank it openly. Let the paperwork happen. It's the business's job, not your crime. You see what I mean now about it being the opposite of what you'd fear? The danger was never in the size of the transaction. The danger is in trying to outsmart a rule that was never aimed at you in the first place. Let me bring this all together for you now, because I know that's a lot, and this is the kind of thing you want to be able to hold in your head, or even screenshot and keep. Grab a pen if you like. Here are the three things, clean and separate. Number 1, the rule that's real. Austrac's threshold transaction report. $10,000 or more in cash means the business, the bank, or the dealer files a report, generally within 10 business days. It's their paperwork. It costs you nothing, it bans you from nothing, and you've done nothing wrong by triggering it. That's on austrac.gov.au. Number 2, the ban that's not real. The currency, restrictions on the use of cash bill of 2019. It would have made big cash payments a crime. It passed the House of Representatives, but it was rejected in the Senate and never became law. There is no cash ban for individuals. That's on aph.gov.au, the Parliament's own record. Number 3, the thing that can actually bite you, and the only one of the three you genuinely need to be careful of. Structuring. Splitting your cash on purpose to slip under the 10,000 line is itself an offence. So don't do the clever trick. Do the simple, honest thing. Bank your money in the open. For more on how this fits with your everyday banking and protecting yourself from scams, moneysmart.gov.au is a calm, government-run place to read more. And I'll say it one more time, because it's the whole point of today. The version of the cash rule that frightens people is mostly the ban that never came to pass. The version that's true is just a piece of paperwork the bank fills in. You can walk into your bank tomorrow, withdraw your own money, answer a simple question if they ask one, and walk out with your savings and a clear conscience. The fear was real. The rule behind it mostly isn't. Now here's why I made this for you and why I'd ask one small thing in return. The reason this fear spreads is that nobody corrects it. It gets passed along, retiree to retiree, neighbour to neighbour, in good faith by people who are only trying to look out for each other. So if you know someone, a brother, a friend, a neighbour, anyone who's nervous about their own cash, who's heard there's a $10,000 rule and gone quiet about it, send them this. You might save them weeks of needless worry, and you might, just possibly, stop them from doing the one thing, the structuring, that could actually land them in strife. That's the kindest thing you can do with the next 10 minutes. I'm not your financial advisor, and I never will be. I'm just the person who reads the rule book out loud so you know what to bring to your own conversation. So here's what I'd leave you with. Check it for yourself. The AUSTRAC rule is at austrac.gov.au. The 2019 Bills record is at aph.gov.au. And the plain English everyday banking guidance is at moneysmart.gov.au. Don't trust the morning tea version, and don't trust me either. Trust the source, because it's right there waiting for you. Verify your own numbers, look after each other, and I'll see you in the next